Good morning, everybody. Welcome to the Flow Show, the last trading week before the holidays. And you'll have to forgive me today because I've got a bit of a cold coming on. So just what you need when I'm just about to go on a little jolly up for Christmas with some friends. So need like that, like a hole in the head. Anyway, life goes on. Morning to you. Morning, K-Man. Did you have a good weekend?
Morning, Ryan. Morning, Ryan. Sorry to hear that just before Christmas you're suffering a bit. But is it a hangover cold or just a pure cold?
I wish it was a hangover cold because then I battle through. But well, I
Yeah.
hope at least I hope to get over it before Christmas anyway. But yeah, can't keep a good man down, as they say.
Absolutely.
So yeah, battle on, battle on. Right. Anyway, how are you doing, mate?
Yeah, I'm doing okay, but I think I twisted my back with all the boxes that we still have to shuffle around after our move. So today I'm a little bit suffering from the lower back.
Bloody hell, it's like the Walking Dead around here.
Exactly. Hey,
Tomorrow's Flow Show will be coming from our local hospitals.
yeah, yeah.
Oh dear me, old age for you, old age for you. Right, let's get stuck into it. See what's going on around. No, I don't think COVID causes bad backs.
No, no.
Well, you never know. That might be next year's COVID, given the lurgies you can get from it. Right. Anyway, let's go. Despite the bum fight over tariffs and slamming each other with tariffs on chips and soda this and soda that, the US and China have apparently agreed to extend the Science and Technology Agreement for another 5 years. So that's good news, apparently, according to the China Ministry of Science and Technology. So one area where they seemingly are getting on. PBOC still fixing the 718s, no change there for now. In terms of whether they're going to let their currency weaker. We have had a bundle of data out of China overnight. If I can find it, there we go. So lots of data out. Where should we start? Retail sales, probably one of the most important ones, coming in at 3% year on year, beating less than the 4.6% expected. Year to date sales down a little bit to 3.45%. Unemployment rate staying unchanged at 5%. Industrial production, and these are all year-on-year numbers, coming in pretty much as expected, not too dissimilar to what we saw last month. Investment, though, was a touch softer, down at 3.3% from 3.5% expected. So overall, not horrendous data. Still ticking along, still positive numbers, but not doing much for the overall state of the economy anyway. The Chinese Stats Bureau said they will implement more policies to expand domestic demand. Coda News joined the queue or joined the list of news outlets with BOJ sources also saying that they are looking at potentially skipping a rate hike this week. Their announcement is Thursday morning, early hours for us here in the UK and Europe. So it seems we've got a bit of a coin toss, if not maybe siding towards them not hiking this week. We won't know until we get there. But some data out from Japan as well. We had some core manufacturing orders coming out, which showing a healthy 2.1% month on month and 5.6% year on year, both beating expectations quite nicely. So again, some aspects of the Japanese economy continuing to produce some good numbers. As you can see there, we got the PMIs as well. A little uplift in manufacturing, but still in contraction. Services, which has been a bit of a par for the course today in the rest of the PMIs, going up to 51.4 from 50.5. Swinging back to Australia, or swinging over to Australia, their PMIs as well. Similar story to what we've seen today. manufacturing still going backwards in some cases, 48.2. This services dropped 1 pip to 50.4, but stays in expansion. Kay, we got a ton of central banks this week. Any changes of mind for the BOJ since last week?
No, no. I still think there is a very good case, numbers supporting to hike, but yeah, I still have the same question. Is it going to be just a 10 BP token and which won't change too much? I no, I'm it hasn't changed anything for me. If they do 25, it would be well. I mean, then they can, of course, tell us that they are pausing after that. But 25 may be a bit rich. That's what I think. So perhaps 10, 15 BPs or so, just to continue to tick along.
Yeah, no, this is another central bank meeting where it's come down to a fine knife edge over what they do.
Yeah, absolutely.
Compared to a week or 2 weeks ago. So, and that it still might all change by the time we get there. So yeah.
And we can't ignore, of course, those messages that they've sent into the market or onto the waves. But it's hard to ignore what you said before as well, and then the numbers are relatively supportive of them continuing to hike, because the expectations as well are still pretty good as per Ueda's words.
Yeah, he's only been a bit mixed with his messages. I mean, his last comments were that everything's looking tickety-boo, and the economy is on its way to achieving their outlooks and whatever. I don't know. They just seems they always want to find a way not to hike or be more cautious, and perhaps they should be. But that's Japan for you. Moving on to the UK and more good news, this time for the London Stock Exchange, because it's seen its biggest outflows since the coronavirus. A total of 88 companies have delisted or transferred their primary listing from the UK and London, with only 18 coming in and seeking to be added to the stock exchange. It's the biggest net outflow since 2009, and the number of new listings is also on course to be the lowest in 15 years. A lot's been made of that over here. Way UK LSE way down the list in places where people want to float companies. That's not good news. Something that's potentially going to weigh on the quid later on. Over in Germany, this morning, we got some PPI data. Oh no, it was last week. There we go, all the way back there. Excuse me. Oh, I'm trying to find it now. Where is it? Where are we? I can't find it. Oh, there we go. PPI data, or WPI data, whatever you want to call it. No, that's not the one either. Oh, I'm losing myself. You know what? Sod the German data. It doesn't matter anyway. We'll go on to the PMIs instead. So Eurozone PMI is coming out, and as mentioned earlier, starting with France, their manufacturing went backwards, was expected to rise a bit, went down 41.9, but we did see services picking up a little bit, 48.2, still in contraction. Germany doing the same thing, 42.5 on the manufacturing, going backwards. Services pushing into expansion at 51. Looks a big surprise number, but I looked at the history. Really, only the last 2 months have been the only 2 months that have been negative, so under 50 since earlier this year in March. So that's sort of back on track rather than a real massive improvement from poor numbers, certainly compared to what's going on in manufacturing. The pan-Eurozone number reflecting what we've seen now. Manufacturing unchanged over last month, services ticking up overall. UK numbers as well, similar theme, manufacturing backwards, services forwards. that's the biggest part of the UK economy. So that's the good news on that side. ECB Centino saying gradualism is the most important word. It says the level of interest rates in the euro area continues to be restrictive, which is slightly going against the ECB message we got last week that they have shifted out of restrictiveness. ECB's Reinesh says it's reasonable to think rates will move in steps to 2.5% at the beginning of spring 2025. So around 50 pips of cuts going before the spring, according to Reinesh. Casimir says more aggressive monetary easing would require a dramatic shift in conditions. Was happy with the 25, and that's the way forward. De Guindos finally got his chance to speak. Says that our confidence that inflation will converge to target in 2025 is reflected in our monetary policy. Lagarde was out this morning as well, saying more rate cuts to come, and the direction of travel is clear. They will cut rates further if incoming data confirm that disinflation is on track. The past bias to keeping rates sufficiently restrictive is no longer warranted, and we are close to achieving our target. So more little victory laps about inflation there. Right, going back to Friday, and I'll definitely find this one. No real data out from the US on Friday, but we did get import and export prices, which added on to CPI and PPI. Again, pretty much going the same way. Positive numbers all round. Last month, year on year, we got minus 0.1 for export prices. That was up 0.8%. Import prices year on year up 1.3% from 0.6%. So keeping that sticky inflationary numbers going. Over in Canada, we got some manufacturing sales numbers out, 2.1% month on month for October, so a decent healthy beat there. Wholesale sales also up 1% versus 0.5 expected, something that the Bank of Canada, particularly Macklem, wants to see a pickup in the economy, and that might be the start of it. The Finance Ministry in Canada are going to remove the current rule limiting investments in Canadian entities by pension funds to no more than 30%. So they're taking away that rule, which will allow all pension funds to buy into Canadian companies, something that I hope will stoke a bit of demand. Right, geopolitics. The new Prime Minister is in place in France, Francois Bayrou. The clock is ticking on how long he lasts. So far, the National Rally's chairman, or whatever you want to call him, Bardell, says the nomination of Bayrou as PM shows that the party's red lines on policies still remain. So he hasn't gone down well. There will be a bit of a grace period for the new PM, but if he's just Barnier Mark II and we get the same sort of budget put forward that he did, then we're going to be playing the game all over again. In Germany, we get the confidence vote today, which looks to be a foregone conclusion. Election's already slated for February, so it's not really anything that's going to rock markets. Probably the surprise is if Scholz passes the confidence vote, but it's not expected to. So whatever happens, looks like we're heading to elections, so the market's ready for that. Mr. Musk has already seen some profit from his lobbying of Mr. Trump, because last week, apparently the Trump transition team has recommended repealing the autonomous car crash reporting requirement, which, funny enough, was opposed by Mr. Musk and his Tesla company. So already doing a bit of back scratching the other way. Mr. Trump also apparently said that his party will use its best efforts to eliminate daylight savings time. This is something that's been an ongoing saga. So maybe that will happen this year, and we won't get any clock changes, or we'll get one clock change and that'll be it forevermore. We shall see. Kay, any other news headlines you've got? I haven't mentioned the knock thing, but that was already in the pipeline.
Yeah, yeah, I was going to mention that because there may be a little bit of confusion around that because it was kind of brought on as something new, but it's something that the Bank of the Norges Bank governance has been talking about for months already. So I guess that's just the change of rules and to 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 be able to repay some Norwegian kroner and perhaps somewhere in the background also one of the finding a reason not to have to buy FX all the time and deteriorating even more the Norwegian kroner outlook. For the rest, yeah, it seems that Scholz would love to get voted out, so he can take a rest. And on the Bayrou thing, it's Bayrou has been around for decades, okay, and he's been voted away so often in the past that I'm not sure how long he's going to last. Now, the one thing that he already did is to call up Le Pen today to have a meeting, so we may get some comments out of it because she has the key to unlock quite a few closed doors in France now, right? If she would decide to support some of the budgetary measures that Bayrou may come up with, that would mean something in France to just continue to function basically. So that is something we need to keep an eye on. And for the rest, yeah, I don't know. So it's the how did you call it? The Trump tactic team or
Transition team.
transition team? Oh, okay. So is it
Yeah.
the PPT rebaptized in TTT now?
I don't know. I think these are the removal men.
Okay.
Yeah, they're getting Biden's chair out and putting Trump's lazy man
Uh-huh.
chair in. The nice electric recliner job. I'm sure he likes. Yeah, that's what that's about. But yeah, definitely a bit of back scratching going on there. I'm surprised it took this long
Definitely.
for something like that to drop. To
But
be
he
honest
has
with you.
to do, huh? He has to.
Yeah.
Did Musk pump over $1 billion into Trump's
Well, close to. I think it's
yeah.
definitely $500 million into it. So yeah, he's got to get something for his money. But
Uh-huh.
anyway, who'd want to be in politics, eh? Right, let's have a look what's going on. Not an awful lot, really, going on in a lot of markets, particularly some of the majors. Euro dollar knocking around the 105. We do have some decent expiries again today. The biggest one being up at 106, over 6 billion rolling off there, but it's going to take something to get us up there. We do obviously have the Fed this week, and that's really going to be the main focus for markets. We've come past the ECB now, so for the euro, it's all about really the dollar side. Very little move around the PMI data today. I think the US data is going to have a lot of significance, even some of the smaller numbers ahead of the Fed this week, just because it's the last meeting of the year. Market wants to know, it's pretty nailed on that we're going to get a 25 cut according to expectations. It's just, is that, a cut? Is it going to be a cut and pause, or is it going to be a cut and continue? That's the question we're going to be playing. So the market's going to look at a lot of data today, and we are getting a bit of a squeeze in before the holidays because we've got the Empire Manufacturing, which is usually the first number of the month, which isn't often followed so quickly by the PMIs. We get that later today as well, the US PMIs. So, as I say, the market is going to focus on a lot of these data points and maybe even some of the smaller ones because it wants a broad view of the sectors going into the Fed, and we get some housing data as well this week before the Fed. So, yeah, we could see some jumpiness if the market wants to do some last minute positioning while everyone else has got one eye on Christmas. So we just need to be careful today. I don't know what's going to kick euro dollar out of this range, Kay. We had the confirmation last week, 104.50. Now we're sitting bang in the middle again.
Yeah.
Can we break the range, or will we have to wait for maybe the Fed or year-end flows?
Well, assuming that that the Fed is a limit border case of doing like a very hawkish now, expected 25 BPs cut or even pausing. Could be that we are going to test the underside again. That is what I'm reckoning with. And then look, year-end flows. I had my ideas, and I still have some of my ideas about it. But so far, it does seem to me, at least, looking at it from where we sit, and we are not in banks. We don't know what the people are doing exactly, but. It does seem that they may be waiting for the FOMC to be over to flood the market with the year-end flows, and that would open the door to some very strange moves. I think in the last week, because who says waiting for FOMC? That leaves just effectively maybe three, max four trading days, if
Yeah.
as much, to really get flows in. So if there are any decent flows to be done, they could really drive the market to somewhere where we don't expect it. So more than picking a side, I think we need to start to issue a warning about what may happen, or and especially if we see flows coming out completely out of the blue. Our audience should not be surprised, because we will have warned them enough against those kind of moves. Now, to come back on what's happening this week, as you say, um, there's two possibilities. The data being completely ignored, or having a bigger impact than what they normally should have. And I said this on Friday as well, and repeated it this morning. This is going to be one of those markets where it's either or, and or either or. It's yeah, but I would suspect, all else equal, that ahead of the FOMC, people may be tempted to own a few dollars just into it, because it's kind of really going to be a whatever happens, cut or no cut. It seems that we are going towards a pretty hawkish meeting from the Fed.
Yeah, exactly that. And we'll have a quick look at the calendar as well, what's coming up. Because we do have some key data. As I said, we've got the PMIs later on, Empire as well. But tomorrow we get retail sales. And these retail sales will include Thanksgiving and Black Friday. So it will, again, just be a little bit of input from the consumer side of things. And I might think that this might be the biggest potential market mover for the dollar in terms of size of data before Wednesday's FOMC. We do get some other little bits and pieces. NHAB Housing Market Index, again a small number, but that gives us a quick insight into the housing market. We get starts and permits on Wednesday before the Fed. So yeah, there's going to be a bit of focus on this US data, and say particularly retail sales tomorrow. Then I've lost count of the banks. We got Banksico this week. We've got
Norges.
BOJ. We've got Norges as well.
Yep, Riksbank, I think.
Riksbank, Norges, BOE on Thursday, Bank of Japan on Thursday. So yeah, we've got a whole lot coming in. So lots of data as well. UK data is coming thick and fast. Tomorrow is jobs data. Wednesday, PPI and CPI. And then on Thursday, we get the Bank of England meeting for that. And I'm not holding out too much hope for the data this week in terms of it being strong. We saw from the PMIs this morning that there's been a little bit of a bounce in underlying stuff, but as the PMIs reported, job losses have increased the fastest in 4 years. Which is not good news for the bank, but also prices have been rising as well. So there's a conundrum for the BOE to get through. Expectations for them to stay unchanged and potentially by a strong vote, maybe an 8-1 for that unchanged. I don't know about that. Yeah, this is another coin toss. You got any thoughts for our mate Bailey?
Well, I'm starting to think is going to be the most difficult one, the most difficult one to predict in the end, because we are seeing contradictory numbers, and it is very possible that those Friday's numbers were one-off as well. I'm thinking so. It's going to be very interesting on what we get as extra numbers this week, and especially the CPI, and it's going to be a real coin toss. I was in the camp for a long time. I was in the camp where Bank of England may be the less dovish central bank in the whole lot. But I need to revise my, well, I have already, but I need to revise my opinion compared to the FOMC, for instance. But also, I'm going back to the middle of the road for the Bank of England, because even if it was a one-off, they still would not have liked those numbers in of the GDP, and especially the GDP, because if you say, as you say rightfully, prices are too sticky, but your growth is nowhere. Does that remind us somewhere about Germany, perhaps?
Yeah.
It's not good news. To me, that's not good news. And knowing Bailey, he might all of a sudden come over dovish. And that is now one of the possibilities we have to take into account. But yeah, I mean, it's so tough to have to keep base cases when data are coming out not exactly as we would have expected them or hoped for them. So yeah, I think about the hawkish Bank of England, I think I'm going to just put it in the fridge and see what happens really.
Yeah, no, I agree with that. If the data tomorrow Wednesday is pretty soft, then obviously the market's going to probably
Oh yeah.
raise expectations for a cut, and if it's pretty good, then we'll probably shift the other way. So it's
Mm.
really going to be hard to pick a side for this one.
And then and that's why I'm saying why it's so difficult, because
Yeah,
sterling was for me, besides all that, sterling was for me one of the currencies that should be doing actually really well into year end, because of the divergence between assets here and across the pond for especially, and but also versus European. So it's I'm in a little bit of a pickle for what my views are for sterling. Um, yeah, I think we should perhaps wait for Wednesday and then see really what we are going to do with the sterling.
yeah, exactly that, exactly that. I can tell you, I won't be trading much past Thursday. At least new trades, whatever happens, because that, like you said earlier, that's when the market is going to be, finishing for the holiday period, and we might see all sorts of flows coming in. Just to close off the week, we do get some bits and pieces out the US. We get the Philly Fed manufacturing, existing home sales. Forget about the GDP number. I think that's the final Q3, and we're just about to finish the year off. But some of these other data points might have a bit of influence depending on what the Fed has said or done. If they've sounded pretty dovish and we get some really strong US data, then the market will swing the pendulum the other way again. Friday, we get UK retail sales. Everyone will be off in their Christmas drinks by then, so don't worry about that one. We'll see whether the UK as well had a good spend up or not. And the final, Michigan consumer sentiment and PCE on Friday for the US. Again, I'm not expecting anything massive from this. It tends to follow the same sort of direction as CPI in terms of variation as well. So again, whatever the Fed announcement is, the message is that PC data will either play into that or go against it somewhat. So that's it on the data front, at least. Let's have a quick look at what's going on. There's one currency that's looking a bit iffy this morning. Not one you picked, Ali, but I'll have a quick look at Kiwi after. But Aussie dollar is looking very, very weak at the moment. The bounces are still getting hit pretty fast. You see all these jumps that we get, and they get hit pretty hard soon after. We're knocking around these lows again, and if we go below here and take out that low, then we're probably going to be heading down to probably 63
Sure thing. Yep, thank you.
There we go.
Yeah, let me just share this. Okay. First of all, and Ali, you say you are in a bit of a gold position today, if I'm correct. Yeah, you're in a bit of a gold position today. Look, to me, it's this zone here. We are not too far away. You see a bit of support here, bit of break there, bit of a retest. This zone here, and that's the one that I've been talking about last week, right? When I said, okay, we can see now potentially some corrections coming in. Now we've had them. We've gone a bit deeper at the start of the markets overnight in Asia, but we are holding those little levels here for now. I think 26.40, 45, and then here as well 26.30. Those are 31, 33, give it 30. Those are the levels that really should hold if this is to be more than just a correction, okay? We could go stretch it to 26.20 where we saw those prior bids come in, but that would already mean a break of those two trend lines. So that may seem a little weak if we get back down there. In the meantime, you know, we are hovering around here. Again, thinking about what may or what the market may think going into the FOMC, we probably not going to run too far on the top side either. But do we have the strength or weakness? Is there enough weakness in gold to really start breaking below those levels? Remains to be seen. I think we are entering a support zone here on gold. So that is about my view on gold right now. I would think that anywhere around 26.80, 75.80, we should find, until the FOMC at least, we should find a bit of resistance. If it goes back above, and then I would say it's still strong, and we may not see those lows again. Also, do not forget, and we've been talking about year-end stuff now already a few times. Do not forget that end of periods, whether it's end of month, but especially end of quarter, end of the year, potentially we do see flows as well in the metals. So be a bit careful if we start to see flows from somewhere, or at times think around fixings also, that should not happen, but that all of a sudden happen. I mean, just know that those flows can be there as well. Silver, nothing's changed. Nothing's changed. We had the correction, still above the support box, and well under the prior 50% there, which I highlighted from where we had corrections. So that is, well, I would say the broader range, but which also I think should be the case right now. And that's about all I can say about it. Interesting is what's happened in the Swiss after the SMB. So we had this move higher in the dollar Swiss. I'm perhaps on the wrong, but I mean, let's just keep it simple. 89 the figure. We tested it this morning, when a couple of pips below, and hold it and held again. Okay, there's a bit of a, let's say, the secondary level below 88.90, because we see these like little lows here as well. Market tends to get a little bit through those levels, but give and take 88.90 figure, that would be a decent hold. There's no reason for the Swiss franc to strengthen. But then again, last year there was very little reason as well, and just remember what happened last year. So, but again here, if you kind of forget about year end, it did hold a very decent level. And since there is no reason, especially not into the FOMC, I would say, to be long Swiss, I would not be surprised if dollar Swiss pushes through just a little bit ahead of Wednesday. Wednesday it is. Wednesday. Euro Swiss also broken above, despite the still the euro weakness. We are retesting already some supports here around 93.5. I would. This is not my preferred, but it is a very good barometer to know what's happening in Swiss because the Europe and Switzerland are each other's very big trade partners. So if Euro Swiss holds and pushes through, it is likely that the rest of the Swiss pairs will also see some Swiss weakness, or at least Swiss strength be kept in check. So it is a barometer to trade whatever else that is happening in Swiss franc, more than me trying to pick a side here really on this one. Okay, so if you see all of a sudden this one's starting to come down again, just pay attention to the rest of the Swiss pairs because it's probably going to go, all of them are going to go the same way. Dollar yen, we are in a bit of a zone here. I think we are in a bit of a zone here. Look at this 153.80, 153.65 here as well. From 153.40 up to 153.80. We are in a bit of a zone. We are trying to get above. The market is, as we've been discussing, the market is somewhere now split between, is the Bank of Japan going to go? Are they not going to go? But especially the FOMC is expected to be hawkish, whatever happens, whether they keep rates stable or indeed cut them 25 with a hint of a pause. So I really wouldn't be surprised if we push through a little, just in line with the rest of the dollar pairs. I mean, Ryan already showed the Aussie dollar being very weak. Cable is kind of not holding any, well, big bounces either right now. So a bit in line with all of that. And the uncertainty about the Bank of Japan, I think we may push a little on the dollar yen here. Yeah, Ali, about your euro dollar, we've already said what we thought. We're in a range 4.5, 5.5, and as I said, I wouldn't be surprised coming out of the European PMIs as well. That we are going to test the downside of that range. Just say that I wouldn't be surprised. We're not holding the highs here around 105.25, 30. You know about the 105.40 having been a bit of a battlefield here. So 20.40 euro dollar for as long as we stay below, it does look like there is a fair chance that we are going to go just as the underside of the euro dollar again. Dollar Canada, I personally still don't have a clue, so I'm going to leave that one alone. And I think I'm kind of done with what I wanted to show today, unless you want to see what happened in the Norwegian kroner after that Norges Bank statement. Well, the reaction is not a lot, and we are already back. Pushing against that 11 2021. As I said, announced. Well, I mean, we are in resistance territory, I would say. One could argue that if it breaks above 2021 here, we have a quick visit at 11:30. Yes, all very possible. Now, what are we doing till year end? I don't know. We still have the Norges Bank to come. But again, same as for the rest of the dollars, the dollar is behaving relatively well. So I would say it is possible that we're going for the higher test. And that's about it for me, Ryan. Back over to you, mate.
Thank you very much, mate. Yeah, Ali, I've been keeping an eye on dollar CAD myself. I think you probably got a decent trade there. If we're staying above that 42, 41.90 level, you're looking good. Next level above 42.65 for me on that one. Yeah, we'll call that a day for today. You will be in Kay's good company tomorrow because I'm off tomorrow, so I'll see you back for Fed Wednesday. So have a great couple of days, everybody, and yeah, take it easy, trade safe, be careful, and Kay will see you tomorrow. Have a good one.